Hey guys, this is Eric Chen from Injective Protocol. I dropped out of NYU a couple years ago in around 2018 to work on Injective, and basically it's been a pretty long journey ever since then. And so Injective is basically a blockchain protocol that focuses on the trading of derivatives and many other decentralized finance protocols.
Yeah. So I know very few of what those things meant, but do you mind maybe walking us through that journey? So I remember in high school, you attended a lot of hackathons. What was that build up process like in terms of getting into decentralized finance and, familiarizing yourself with it?
Yeah, so I think it's a pretty long process. Basically in the beginning, like I was super into tech,
Mm-hmm.
and in high school, obviously went to a lot of hackathons to kind of explore to look into a career in that. Doesn't really help when you grew up in the Bay Area when like everyone that you know, especially every single adult, are software engineers. Works for a certain software company and stuff like that. So I think initially I felt like it was more.
Valid.
Yeah, initially I think it was more of a bubble. So that was like pretty strange.
Hmm.
Uh, but later on, that's kind of what pushed me to like study finance at NYU. Is that I want to kind of venture out of the bubble, like explore more, and I kind of realized that at the end of the day, like tech and software is still kind of like the place to be, and it's where I'm good at.
Hmm.
And in terms of venturing into DeFi and like blockchain, I think it mainly has to do with the fact that I was searching for something that I'm good at. With the background I was given, I started off getting really fascinated by all things related to crypto,
Hmm.
and kind of realized I was like pretty good at development, and also like the financial aspect and the economic aspect of it. And that's when I really got into it. I think before starting Injective, I was already working at funds, doing a lot of research on cryptographic protocols. So it was a pretty natural next step for me to work on something that's my own. And basically, it was like an idea. We pitched to some like VCs, and we got kind of like the pre-seed slash seed funding, and so that's kind of like the final pushover for me to drop out.
Yeah. So I think maybe unpacking those steps when you were, realizing, oh, like I'm pretty good at this, I have a knack for this, what was the support around you like? Like you said, it was a bubble in the Bay Area. How did you find the ground where you were like, it's fine that I'm interested in these things and I really want to invest my time in it?
Yeah, I mean, basically, it depends really. There's almost like an instant gratification because when I was like really devoting my time into it, it happens to
Hmm.
be a bull market within the crypto world.
Yeah.
So there's a lot of tension around it. So you kind of like you're kind of instantly rewarded for any effort you put into it. So that was kind of like an intricate and interesting like relationship.
Hmm.
And basically, but I think the same goes to most of the industries. Like if you're really good at something, if you have like fundamental understanding that beats 99% of the ecosystem or like market, then you're going to be rewarded to different proportions accordingly. So basically, I started off doing a lot of research, eventually working for a fund. I would say that that was kind of like the first step that really gave me the conviction to work on this full time.
Okay, got it. And about the emergence of your idea.
Mhm.
So I know you have a partner right now working with you, a co-founder. What was that process like? Like how did you come up with your idea of an exchange? Kind of why invest in that segment instead of maybe something along the process?
Yeah, it's like it's an interesting. So basically, like the way I kind of came up with it was because I was doing research, and there were like there was a pretty new cryptographic primitive called verifiable delay function, and I was doing a lot of research on that front, mainly first on alternative candidates for that scheme, and later on for applications of it.
Hmm.
And so it was mainly like seeing like a promising I would say like research or like breakthrough in a sense, and kind of like utilizing that to solve certain fundamental problems that we face within like the crypto space. So that's kind of why I came up with it. And obviously, one thing that I noticed is that like back then DeFi wasn't a thing, like
Hmm.
decentralized finance wasn't a thing. but it was extremely promising. I think even though there are a lot of other applications for blockchain, back then there were like a lot of different dominant narratives. I think decentralized finance kind of traces back to why Bitcoin became a thing, why Ethereum became a thing. So that's kind of why I think that space has the most like possible, like the most promising future development.
Okay, got it. And maybe if we could walk back, so you said it addresses some of the fundamental problems with cryptocurrency. Do you mind elaborating on a little and sharing maybe what one of those problems is?
Yeah, it's a pretty like specific problem. So basically, on Ethereum, like there's this thing called race condition. So basically, all the transactions could conflict with each other, and
Okay.
the miners, or I don't know what's like a better word to put it, but basically people who generates these block,
Mm-hmm.
they kind of have that discretion, but
Mm,
obviously they act in like a profit maximizing way.
right.
So
The
basically, people
individual.
just yeah. So basically, people kind of just like bid each other. It's like, hey, like this is a transaction that seems profitable. I'm going to beat him to it, pay a higher gas or like higher transaction fee to have it executed first, so he loses that opportunity. So this is generally called front running.
Hmm.
It happens in traditional finance as well, but not it's not as prevalent and not as easy compared to crypto.
Mm-hmm.
And so it was kind of that was kind of the problem I was trying to solve. Basically, like how can I build an exchange that doesn't have these type of problems? But obviously now it's a lot more than that. But that was kind of like the entry point that I kind of came in with because I think like the utilization of verifiable delay function is really interesting, and that could solve something very fundamental. That's kind of like um, plaguing to the core of it. So I kind of made basically two bets. One is that firm running becomes like a major issue, which is true
Mm-hmm.
actually, and two is that decentralized finance, or back then whatever it was called or whatever it was like coined, will be a thing.
Okay, got it. And okay, then let's walk forward to, the point where you're like, I want to actually formally do this. What was that process in terms of how did you meet? His name is Anthony, right?
No, that's Albert.
Albert. Okay. How did you meet Albert? Wait, really? The one on your stories?
No, that's my friend.
Oh, he's not. Oh, okay.
Yeah.
Okay, whoops. So your co-founder, how did you meet him? Slash, I feel like that's a big process, right? Deciding your partner in the next future steps for the foreseeable duration of how long you want to hold this out. Um, what was that like? How did you meet this person? What was your vetting process for each other? Like, I'm sure Albert, kind of flushed you out too before hopping on this with you.
I mean, we've been friends for a really long time. So, ironically, the first conversation we ever had was about crypto,
Okay.
and he was kind of the guy who kind of brought me into kind of like the crypto trading world.
Hmm.
Um, Obviously, I kind of like brought it a little bit further along because because of my finance background, but
Mm-hmm.
he was kind of like the inception of it. So I think like by being friends, by getting to know each other, by he was working at Amazon and I was in New York, so we were both in New York, kind of spent a lot of time together. It was like a pretty natural next step because I started working on Injective by myself for a little bit.
Oh,
Uh, and then later on kind of brought him along because like he kind of saw conviction in the project, and it was a very natural fit.
got it. And when you say, for a while that you started it on your own, that was while you're in school, right?
Yeah.
And how did you juggle that? What was that process like?
Well, it was summer, so
Oh, okay. And then that's when you kind of, oh my God, so that process took relatively a short
yeah.
amount of time, right? So freshman year ends, you get started on it in summer, and sophomore year, you decide to leave school.
No, I think it was sophomore year, summer, like close to junior. I kind of forgot, not gonna lie, but I think it was sophomore year or junior year, summer.
Okay.
Um, Yeah. So basically, I was like already working for a fund part time, and
Mm-hmm.
basically, I was like pretty convinced that I'm gonna eventually work on something, and I kind of stumbled upon the idea, so I kind of like fleshed it out a little bit more,
Mm-hmm.
and then later on, kind of brought Albert along with the journey.
Got it. What was your pitch to Albert?
I mean, he was kind of like pretty involved in the process. So
Okay,
there
so you
wasn't
were
like,
kind of just like, we're doing this on board.
yeah, because
um,
Injective started off pretty like research focused.
yeah. Okay, got it. And how big is the team now?
It's around 23 to 25 people.
Okay, got it.
Yeah.
Do you mind talking about your values when you're just getting started? Like what was important to you in the day to day of the operations? And then now that it's grown and scaled itself, what does it look like now for you in terms of outlook and kind of the future?
Yeah. So initially, it's more about like fleshing out the product, making a lot of architectural, more on the theoretical side.
Hmm.
Yeah, kind of really fleshing out all the specifications. Um, Obviously, getting your hands dirty and working a lot of different components as well. But um, basically, one guy has to be relatively high level, and one guy has to be more on the implementation side. So I was mainly on like working on the I guess like the protocol design, like the so some of the crypto math behind it. Whereas Albert is mainly focusing on building on this stack, figuring out like what's the best library and what's the best like approach to go to go with.
Hmm.
Because back then it was only like three or four people, so basically everyone was getting their hands dirty. We didn't really do any so-called like business development and stuff like that. It was mainly extremely product focused,
Hmm.
and we did had to like make a lot of changes due to practicality concerns and stuff like that. And I think like in terms of product iteration and product development, that's always going to be like an iterative cycle where uh, very much likely like within a month you might have to rework your entire product that you've been building on for a year. So
That sounds
uh,
stressful.
yeah, it is. So I think that's just the cycle of like building out a product that that really has a product market fit, that people really have conviction for it and people really want to use.
Hmm. Maybe if we could dive into those points. So, when you have that moment where something you've been working on for a year, all of a sudden you're like, it's not robust enough. I want to maybe beef it up, redo it. When you do that process and you embark on it, how did you handle that stress personally? What's kind of the mind landscape there?
I mean, like you really want to be rational about it, right? There's not really like you can't really deal with it like emotionally because like once you do like basically you're kind of losing the battle against the market. Um, I would say that like there's everyone has to be aligned with a common goal of like some of the fundamental decisions that you want to make. Like it could be the vision, it could be the mission, or it could be like some of the more lower level like specifications or some of the requirements that are uncompromisable.
Mm-hmm.
And we do have those. And like once those pillars are like established, um, you iterate the product, and any type of change, long as it's rational, long as it makes sense, long as it's well educated, like you won't really be stressed per se. You might be disappointed in a sense because sometimes it is up to chance.
Yeah.
And like especially as team gets bigger and bigger, and especially as Injective grows, one thing you're going to realize is that you're losing less and less control over the circumstances and over like a lot of aspects of things. But I would say that like this is why you have a really good team. This is why you want to make sure that everyone is aligned with the fundamental pillars of the project.
Yeah. And I think in establishing that pillar, that set of pillars, where did you kind of garner that skill set? Was that the work from the fund that you were at? Is it just, the process up to this point?
Yeah, I think that mainly has to do with the fact that we kind of build Injective with a lot of considerations from go to market, from basically architectural design, from kind of like a core underlying mission and
Hmm.
value that we believe in.
Yeah.
So that's kind of where the pillars came from. So for Injective, it's like it has to be fast to a considerable sense, well, at least faster than Ethereum. It has to be, I would say, robust, permissionless, and it has to be fully decentralized. So those are a pillar that we rest on, and like those are uncompromising points, and then you slowly build up and up to come up with more nitty gritty implementations. And the higher level that you go, the more sacrificable those features become.
Oh, I see. Okay, got it. Um, Maybe could you share, raising capital for this idea, especially since, you've come a long way. You started this at the point when, like you said, decentralized finance wasn't a thing. And now today, how are you kind of maybe in a reverse educating your investors, or how are you, rounding them up for yourself?
Yeah. So we've done like couple rounds of fundraise so far.
Mm-hmm.
I think the first check is ironically the easiest
Oh,
in a sense
that's funny.
because the company wouldn't start if you don't have the first check.
That's all right.
So really, I would say like the angel slash pre-seed slash incubation slash seed round checks are always going to be the easiest to get in a sense because that take the less time and that takes the less investment, at least investment in a sense. And like if no one wants to invest in your project, that probably means that you did something wrong. Well, not necessarily, but it probably means that like not enough people are convinced enough in your product for it to be adopted widely and stuff like that.
Mm-hmm.
Um, there's a whole process when it comes to fundraising. But I think in terms of getting a C check as a natural process without any interference, without any strategy, that should be kind of like the weeder of startups, weeder of ideas.
Mm,
Because generally people would want to back like seed round stuff. You don't really need to worry about kind of like the name, the strategic value of investor for seed round because it's really for you to build up that initial test of market.
yeah.
Um, but ironically, seed round is also the hardest one because like you're going through so many ideas. You're probably going to be pitching a lot. 99%
Yeah.
of you're not really focusing on a product per se. You're more working on like actually you are focusing on a product, but you're also dedicating a lot of time to pitching.
Mm-hmm.
So I think that is certainly hard for someone who's like new to it. And then I would say like afterwards, especially like all the way up to like even sometimes growth rounds, it really becomes like a different consideration. And I would say like for ours, it was like the initial 500K was relatively speaking the easiest because it was an incubation round, and then to the eventual $3 million round seed. That was certainly the most painful process because DeFi wasn't really a thing. Not many VCs and investors find conviction in it.
Yeah.
Decentralized exchanges was almost kind of like ignored and like dismissed.
Mm-hmm.
And basically, the valuation, a lot of people had to take a haircut, or take a lot of compromise.
Yeah.
So I think that was definitely the most difficult part of the fundraise cycle for us, at least.
Mm-hmm.
But like there's a lot of strategies that you can utilize. But I'll definitely skip that part because it's a pretty long conversation on that and hours on that alone. But yeah, like I would say like like for seed that was definitely the hardest for us. But once we have the seed, once we have like the really strategic, really like investors that really believe in us, that really help us along for a journey.
Mm-hmm.
Then for all the follow-on rounds and eventually reaching pretty much like a unicorn status now, it's a completely different it's a completely different track. Like I would say like it becomes more and more deterministic over time.
I see. I see the use of math here. um, okay, that's interesting. And did you guys ever have any kind of internal team obstacles when you were raising? Did you guys have disagreements? I know, like you said, when you guys take a haircut, then some people are like, let's just walk away. Did you guys ever have that moment?
Yeah, definitely. I would say that generally um, we were pretty uncompromising when it comes to like hey like some investor want like a lower valuation. Uh, on that part, we're like we're very much unwilling to negotiate
Mm-hmm.
because that's simply out of fairness. I would say that the interesting part out of everything is just that there are internal team agreements in terms of like how we want to pitch and stuff like that. But I think eventually what ended up happening is that, like, um, um, for a startup, and especially for a startup that moves quickly,
Hmm.
especially for a startup that has less than 5 people, it really should be kind of like, in a certain sense, at least, from a management perspective, it really should be like kind of like a individual agent moving within the best interest that aligns with the company. So that means
Mm,
that, like, someone handles the business development or like the
yeah.
fundraising side, at least for a certain time period. And, if everyone believes in him, then he will be the individual agent that has kind of like a veto power over everyone else's opinion,
Hmm.
at least for that time. Because sometimes, oftentimes, like, um, people might not share the same, like, I would say, like, context. They might not share,
Yeah.
the same kind of like strategy as you, and there will be way too much communication friction,
Mm,
and way too much alignment that will like ultimately compromise the greater goal.
yeah.
And so this is why team is so important, because you have to make sure that you trust that guy enough to do to do that himself.
Got it. And was that you for a while, or did you guys hire someone?
Yeah, that was me for a while. And so basically, initially, it was like me and my co-founder Albert pitching,
Hmm.
and then later on, basically, like, we kind of realized that our pitching strategy is like very, very divergent, and eventually it
Oh,
became like me pitching for like a more like aligned, and then like
okay.
slowly over time, basically, like, I kind of worked out a rhythm, kind of figured out a lot of stuff myself. So it kind of like been just like me fundraising from that point on.
Got it. And okay, let's just zoom forward to today. What is your outlook in terms of, well, I don't know your timestamp here, but the next year, let's say, what is the mission for the next year?
Yeah, I think it's really about, like, gaining a lot more market share.
Hmm.
Basically, kind of educating people, because like, derivatives specifically, it's not as well understood of a product, compared to other, I would say, like, assets, or like instruments within crypto.
Yeah. And
So
even crypto, the market, I feel like it's growing, but it's still small right now.
yeah, exactly. So I think that's something that we're going to be focusing a lot on.
Hmm.
So basically, bringing in more and more users, having them have full control and understanding of the risk, and really, like, just in general, derivative is a really powerful tool. It's kind of like, like bringing fire to the mankind in a sense. Where if you don't use it properly, you're going to get yourself burned. But if you
Yeah.
use it properly, you can basically have a capitalization of your belief in a sense.
Yeah.
Like, if people don't like one thing that we realize is that people don't really trade futures from the retail perspective. You don't really get access to those from Robinhood. You don't really get access to those from, most of the brokerages,
Hmm.
easily, at least. I mean, as a matter of fact, to this day, like, well, I mean, like, I would have gotten it if I spent more time on it, but I still couldn't get, like, the interactive broker, like, permission to trade futures, which was pretty funny.
Yeah.
Um, but there are just a lot of instruments like that that are, not accessible, because the inherent barriers and the lack of education on the nature of those instruments. So, for example, because of the Texas freeze, the energy market went crazy,
Yeah.
and the retails, especially for like Texas residents who are suffering from it, they can't really gain from this, or like capitalize on this, which is, really unfair, because they suffer the losses, but and they have the first mover on information, but they simply can't really have the capitalization, or like,
Yeah.
profit from it, like, even as a compensation. And like, the treasury yield, like, with all the stimulus package, and all the practically the money printing, traders can capitalize on it by, like, trading TB and ZB, some of the treasury bond futures, but other people can't really do that because they don't have access to those
Right.
instruments, right? So I think that's kind of like the fundamental issue. It's like, like, it's a really powerful instrument, and a lot more people should have access to it. Obviously, there's the confinement of crypto itself, where, like, you probably don't have access to those instruments just as of yet, but that's a step I really want to take in the long run. It's like, build out this decentralized, borderless, kind of permissionless, like a futures exchange protocol.
Yeah, for sure. Okay. Um, Maybe something a little bit more extracurricular. Do you want to share your opinion on NFTs in the market? I think it's a pretty big buzz now, and I'd love to hear your opinion since you're in the space.
Yeah, I've like backed some like interesting like NFTs
Oh, you've
initiatives, I
bought
guess.
your
Or
own?
no, no, I support a few projects. I
Okay.
bought it. Did I buy a few? I'm not exactly. Technically, I did, I guess. But I mean, like just in general, like we kind of saw like NFT like blooming in like 2018, um, and basically back then it was very clear to us that it's it could be something really interesting, right, to say the least. The problem with NFT back then is that there's no inherent like artistic value or some sort of like emotional value to it.
Hmm.
It's almost like back then it was like pure gamification, right? And if you want to really create true value, just in general, you either have to have kind of like an expectation of future income, like satisfying satisfaction of like basic needs, or like establish emotional and artistic value in a sense, right?
Hmm.
So one thing that I was always looking forward to is to see like um, these kind of like emotional values and artistic values kind of like linking with the NFT world. And obviously now they've successfully done it, right? There are artworks that are breaking auction records. There are like artists and creators and even like anonymous artists who are doing interesting things on top of NFTs and minting them. So I think that's like one of the most progressive development that we could possibly see. One problem with crypto, and that's always the same problem, is that like there's always going to be rent seekers, there's always going to be profit seekers, there's always going to be like kind of like a hyper like uh, yeah, like a hypermania or like a hyper capitalization on these products,
Hmm.
where like people are just looking to make a quick buck, or like sell like weird or like sometimes even like fraudulent stuff. So I think that was kind of like what created this like discussion around it and like this concern around it. It's like people think that it is a bubble, and people are concerned that like when is it going to burst. But I would say the upside, or like the good thing that comes out of this, is that like I mean I guess I hope is that like these are collectibles at the end of the day.
Yeah.
Um, like the price you pay is how much you're devoting to own it. And
Hmm.
generally for these collectibles, just like how people collect watches, you're not really expecting to you're not really expecting future appreciation in a sense. Maybe some do, and as a matter of fact, most art collectors do. But you fully understand the risk of it, or you fully factor in the risk of it not appreciating. And
Hmm.
sometimes like the ultimate buyer is someone who really likes the work, or someone who believes in it, or
Yeah.
someone who really appreciates it, right? So I think that's kind of the good thing about NFT is that even if you paid something, if you overpaid for something, I don't think it's something that you regret on, or it's like something that that you have to capitalize for a loss, because at the end of the day, it's not an investment product.